Well, good morning, everyone, and welcome to the Profit Planning webinar. We're excited to have you join us this morning. Our goal with this webinar is to provide valuable knowledge and insights to help increase your farm's profitability for years and generations to come. We're excited to have you with us today as we host for the first time on Facebook and YouTube Live. And with that functionality, we ask just put your questions in the chat and we'll get to them throughout the presentation as well at the end. And so without further ado, I'm excited to announce that we have today with us Ted Seifried, Chief Marketing Strategist for Zaner Ag Hedge. And we're excited to have him with us today to talk all things grain marketing. If you've been tuning in to our profit planning email every Tuesday, you've noticed that we have no shortage of topics around grain marketing and things going on in that space. And so we're excited to have Ted with us today to kind of go through all of that information with us and break it down that in a way that you guys can use it on your farm and to make valuable decisions for your operation. So without further ado, I'm going to turn it over to Ted to talk all things grain marketing. Good morning today, Ted.
Good morning, Jenna. Good morning, everybody else. Thank you guys for joining us here today. And as Jenna said, my name is Ted Seifried. I am the Chief Market Strategist of Zaner Ag Hedge, and I have been lucky and happy to be taking part in the profit planning series. There's an email that we're sending out every Tuesday. So that'll be going out a little bit later today. I was still writing it late last night because there are so many things going on in the markets right now. And one thing that I touched on in the newsletter that will get sent out later today that I'm not going to talk about too much here today is the new development that we had yesterday, which is Argentina dropping its export tariffs that they imply or they impose on their farmers between now and the end of October, which should free up a lot of Argentinian grain. And that is, could be a bit of a detriment to our export markets. So if you get a chance to read that, I highly suggest that. So anyways, let's jump into markets. I'm going to try to cover as much as I can here in the time that we have. If you have any questions, please do feel free to put those in there. If your questions are relevant to where I'm at in the presentation, I will try to actually answer those questions while we're going. If not, we can kind of circle back to them towards the end. But please don't be shy. Feel free to ask questions. I love questions. I love giving the best answer I can. So, here we go. This is your channel profit planning webinar. Again, Ted Seifried. So what we're going to talk about here today, the focuses of conversation here today, U.S. supply and production assumptions, right? I say assumptions because we're trying to figure that out right now. And that's really top of mind for everybody that's following markets. You know, what is the corn yield? What is the soybean yield? And that is a debate that completely just rages at this time of year until we really get through harvest. And I'm going to go ahead and say that for a few reasons this year, that debate is even louder. And it means a lot this year because I mean, when you're expecting record yields by a long shot, or at least when the USDA is expecting record yields by a long shot, and we have some issues pop up, we're all going to kind of fight over where we think it should be. The reality is time will tell, but yeah, there's definitely some interesting things to talk about there. Then we're going to look a little bit deeper into corn and soybean demand. It's really two very different things that are happening there. Obviously, you could probably guess what that is. It's really centered on the export market. Then we're going to talk about how the large speculators or the funds are set up as we get into harvest and what that could mean for markets. I have a question mark here about August lows, right? Do we put our lows in August? Well, I have some research about that and some data about that to talk about. And then finally, we're going to talk a little bit about strategy, just a little bit, because, honestly, I really like to sort of get to know the operation and the individuals that I'm working with and recommending strategy to. I'd like to learn your operation as best as I can so I could really kind of be part of that. So we're going to kind of just do sort of a broader strategy. It's not my favorite thing to do. Blanket strategies are not my thing. But I do think it's important to kind of give an idea of what we're looking at right now. And then then certainly questions. And like I said, if you have questions as I'm going, go ahead and drop those in the chat. I will try to get to them. If they're relevant to the slide that I'm on or near where I'm at, I'll see if I can go ahead and answer that for you guys. So, without further ado, here we go. So the first big thing here, we are expecting really plentiful corn supplies for 25-26. Now, that's all very much based on production. But as you can see here, we're looking at a potential 2 billion bushel carryover plus, really for the first time since 1819. You can kind of say 1920. The thing about those is that was really trade war 1.0. So we're kind of back to this scenario or time frame of really kind of overproduction, not having. We've got a lot of good demand, but we've got a lot of corn supplies out there, at least according to the USDA's assumptions on what they're looking at for production right now. And when we look at corn ending stocks and how they change from one year to the next, there's a big jump. The USDA is expecting a big jump from last year's 1.325 billion bushel carryover. That's what we call old crop, to what their expectations are for new crop, at 2.1 billion bushel carryover. I have this slide up because we've got a report coming up a week from today called the Quarterly Grain Stocks Report. The September Quarterly Grain Stocks Report is, for all intents and purposes, the final ending stocks number. I mean, again, these numbers, the USDA always comes back and revises stuff later. It's just when they say final, it doesn't necessarily mean final. But it serves as our ending stocks number and our beginning stocks number. Now, this quarterly grain stocks report, I think there is a chance that we find more old crop bushels. And I say that because of the way that the spreads between the July and December and then the September and December spreads were trading. They were trading at some pretty major carries, meaning the old crop contracts were trading well below where the new crop contracts were. That's not very typical in a year where you have a relatively tight carryover at a 1.325 billion bushel carryover versus a 2+ billion bushel carryover new crop, especially with the amount of acreage that the USDA is reporting that we planted. And it really kind of makes you think, you look at the cash market too, and it kind of has the same suggestions that maybe there were some more old crop bushels out there. So I'm not saying that's for sure. We're going to see what the USDA has to say about that a week from today. But I do want to kind of brace everybody for the possibility that there might be some bigger old crop stocks out there, which serves as bigger beginning stocks. And that's just adding on to the big carryover, the big new crop carryover that the USDA is talking about. So yield estimates, this is what happens September to final. Now for corn, it's pretty mixed, right? There's a stronger correlation when you see the August number. Now we're on to September. I was using this slide for August in the presentations that were given a couple of weeks ago, but the September to final number is pretty mixed, right? Last year, obviously, the final number came in well below what the USDA was saying in September because of the hot and dry finish that we had. But the year before, in 23, we actually saw a pretty solid increase between the USDA's yield estimate that they gave us in September versus where we ended up. So for corn, this number is very mixed. There's no real clear trend here. Now pay attention to this when we go to soybeans, but for corn, it's really mixed. Now, I think a lot of us want to say, well, look at what happened last year. We had a fairly similar finish from a moisture standpoint, not necessarily a temperature standpoint, but from a moisture standpoint, we were really dry. In fact, the driest August that we've seen since August of 2013. So even drier than last year, by the way. So could we see something similar to, or even possibly more profound than what the USDA saw last year, right? I think a lot of us would be expecting the USDA to lower yields between now and the final number. But as we can see on this chart, it's really sporadic. There is no clear trend over the last 10 years of how they've done that. The planted acreage thing is wild. All right. I had this slide out here because what this slide represents is the increase that we see from the June planted acres report, right? So just to recap, the USDA does acres a few times throughout the year, right? They give us our planting intentions, and then planting intentions, then they give us the June planted acres report, and that's supposed to be what we planted. That's a survey of farmers saying, hey, what did you guys plant? And then now starting in August, it used to be September. In fact, back in the day, it used to be October. They keep moving it forward based on, they're getting crop insurance data earlier. Just the way we're entering it, it's not, paper and pen anymore. We're doing it digitally. So they're giving this data earlier, and that gives them a chance to adjust acreage based on what they're seeing coming in from crop insurance. But we've never seen a change that we saw this year from the June planted acres report to what we're looking at as of this September report. It's just a massive, massive increase in acreage. And it's the largest corn area that we planted since 1936. We went bonkers on planting corn this year, which, I mean, if you go back to, February, there was a lot of talk about high input costs. Are we really going to get that much corn acres? Well, the answer was, at least according to the USDA, that yes, we not only got those corn acres, but we got a whole lot more. And that's just a wild and sort of unprecedented number. And really, it's one of the headwinds to the yield talk, right? We want to say, well, it's not a 188, it's not a 186, it's probably maybe a 182. And I'm not saying that's my number right now, but I'm just hearing what people are talking about in social media. Well, the amount of acres that we have really give us a cushion for that yield to kind of come down. Now, let's jump to soybeans here real quick. Soybean ending stocks a little bit different than corn, right? I mean, that 18-19 number is really off the charts. That's trade war 1.0. You can kind of throw that out. But even if you do, go back to 1920 or even 17-18, we've had a lot of years where we've had soybean carryovers. This is the projected new crop carryover, where it's been a bit higher than what we're looking, or what the USDA is looking for this year. In fact, the last 2 years, we had higher carryovers. So the soybean balance sheet is actually kind of shrinking a little bit, at least according to what the USDA's got on their balance sheet right now. And when we talk about soybean yield estimates, well, yeah, on corn, it was very sporadic. On soybeans, there's a pretty clear trend here, right? Their September number has been higher than the final number in 6 of the last 8 years. And given the finish that we had, you would think that number might come down once again, and that trend should still be intact, and that soybean yield could come down. And in a vacuum, that could mean an even tighter carryover for soybeans. The other problem here for soybeans is that while the corn acres really skyrocketed from the June number to the final number, or where the USDA stands now, soybean acres dropped almost 3%. So, less of a cushion for error there for soybean acres. And then, we talk about the issues and what we're thinking about yield right now. I keep kind of dancing around it or alluding to it, but yeah, the driest August since 2013. Really, really a lot of brown on this map, especially on the east, right? And south and east, right? And so soybeans are an August crop. Corn certainly needs moisture in August as well to fill out. And with the lack of that moisture, you really wonder if we were able to hit these big yields that the USDA is talking about. Now, the one thing I am going to say is temperature. We had a relatively cool August. And we had very good subsoil moisture going into the month of August. So how does that all play into it? I don't like using analog years or comparison years that are more than 10 years out, but I keep talking about 2013 here. 2013 was actually a really similar year in the sense that we had good moisture throughout July, and then it really kind of stopped in August. And we also had below normal temperatures. we ended up kind of being surprised by the yields at the end of the year, especially in soybeans. They came in right around trend line. So if 2013 is an indication, it might not be quite as bad as what some people are suggesting. In fact, early harvest results for soybeans, we're kind of hearing maybe a little bit better than expected. Not what they could have been, you know, at the beginning of August, but given the dry finish, maybe a little bit better than expected. I do wonder if that's going to be a bit of a trend as we go through harvest. The other thing has been disease, rust. This is a picture of rust snapshot as of yesterday. Thank you to the Crop Protection Network. They've provided a really cool chart for us to use. And look at that. I mean, there's just, you know, a ton of counties where rust is a pretty big issue. It's pretty widespread. I am going to say it's a little bit less in the east this year than usual, and a lot more profound out in Nebraska and western Iowa. But I mean, it is an issue. We're hearing a lot of sort of horror stories about guys getting into fields that are heavily infected by rust, and yields coming well below expectations. So, you know, to recap the supply side, yeah, the USDA's got some very lofty yield expectations for both corn and soybeans. Generally speaking, I think the market thinks those numbers could come down. However, the question is really how much can they come down? How much do they come down versus what do we got going on the demand side of the equation? And the demand side of the equation is something that we don't talk a whole lot about at this time of the year because we're really focused on the supply side. But it's the two kind of go hand in hand, right? When you have more of something, we usually get more demand. That usually happens by a function of lower prices. And when we have less of something, prices usually go higher and we cut out some of that demand. Well, when we look at what the USDA is doing with demand right now, it's not unprecedented as far as, you know, you can kind of see how this has been an upward trend here for demand as, you know, things grow, demand grows. And so, yeah, it's the USDA has got some lofty expectations. They're looking at basically record demand for every line item category on the balance sheet. You know, just feed and residual, for example, they have 425 million bushels higher than what they were looking at last year. For ethanol, they have it up 165 million bushels from last year. For exports, they have it up 145 million bushels from last year. So they have a whole lot of demand baked into their balance sheet right now. And by the way, all of it together is an extra 730 million bushels year over year. That's a lot. That's a big jump in demand year over year. The concern that I have, especially in that feed and residual category of 425 million bushel, is that if we were to lower yield and therefore lower production, I do think there's some room for the USDA to lower some of these demand numbers. And I'm also going to say that, you know, the early balance sheets that we saw for old crop, you know, go back a little over a year ago, the USDA didn't have big expectations for demand, or at least not as big as they ended up being. So they started low and had to move it higher. At this point, you know, I use the term maxed out. I don't see a whole lot of upward potential for demand this year. If anything, that demand could come down a little bit. So we're kind of starting from the other end of the spectrum, or the USDA is starting from the other end of the spectrum here this year. Now, we're going to talk about, hold on, that's in my way. What do we see here? Yeah, so this part of this is our exports, right? That's the one part of the category that, at least for right now, seems actually really justified. The USDA has raised corn exports by 300 million bushels in the last two WASDE reports, and they have some very lofty goals. Now, 21, 22, a lot of that was a function of China was in here buying. We obviously have not seen China come in and buy any of our corn or soybeans for that matter. So that 21, 22 number, you got to kind of take that with an asterisk. Aside from that, the schedule that the USDA has for corn exports is really, really lofty. It's a very aggressive number. And to this point, we've had really good export sales for corn, better than expected for this time of year. The problem that we have with that is this, and that is Brazil. Brazil, the USDA has them at a 135 million metric ton crop. Canabi, the Brazil's reporting agency, has them just shy. It's a 139 and change of 140 million metric tons. Generally speaking, the USDA is lower than Canabi. A lot of private forecasters have that Brazilian crop over 140. You can argue that the USDA is still too low on the Brazilian crop. And the Brazilians have been slow this year in selling that bean crop. And it's because they've been really focused on getting the beans out the door. So they've been slow on, I think I said beans, but they've been slow on selling that corn crop. That will ramp up a lot more. They have a lot of corn to sell. And as that ramps up, you can start to see our weekly export sales numbers maybe kind of suffer. They have started to do that a little bit. They've been okay the last couple of weeks, but not as good as what they had been. So we're going to have to contend with this Brazilian corn crop that is going to be stealing market share from us. Now, when we talk about soybean exports, okay, so here's the good chart, right? When we take China and unknown destinations out of the equation, you guys know why I'm taking unknown destinations out of the equation, because a lot of times this time of year, China purchases are categorized under unknown destinations until they get reassigned later. But if we take those out, we're actually really good on our export sales for soybeans to every other country that's not named China, or I don't know, right? That's great. The problem is when you add those back in, when you take into account China and unknown, and you look at the number as a whole, it is the lowest number that we've seen since 2008, 2009. It is really not good. We are desperately needing to see our soybean export sales pick up a lot more aggressively than what they have. And it's just China, right? I mean, like I said, every other country in the world is doing their part, but the lack of China buying right now, it leaves a really bad picture for our export sales program. And it really makes the USDA's number look very, very lofty, maybe 200 or 300 million bushels too high, unless China were to come back in. Now, we've had some optimism on that lately. A week ago today, you had Treasury Secretary Bessent talking about, look, there's a lot of progress towards a trade deal. He said he was very confident that we'd have something before the second 90-day tariff pause expired in November. There was a lot of optimism going into the President Trump and Chinese President Xi phone call that we saw last Friday. But nothing really came of that. So you saw soybeans under a lot of pressure on Friday. And then again yesterday, part of yesterday's pressure was that Argentinian deal that I led off with. But we were a week ago, we were pretty optimistic about something getting done on trade. And 1 week later, here today, we are very much not optimistic about that. President Trump and President Xi are going to speak briefly at the Apex Summit at the end of October, first day of November. But that's really just a sidebar. I'm not expecting, and the market's not expecting, a whole lot of progress to be made there. The next real conversation that they're going to have in person is going to be after the first of the year. And that really bypasses the majority of our export window. So we're not feeling very good about what our trade expectations are for soybeans right now. And that USDA export number might be really, really high if we can't get something done and China doesn't start buying soon. And as I was saying, China is the big thing. I mean, this is the slide that I think everybody really needs to, take a screenshot of this. Like, look at China. This is in metric tons, but China imports 25 million metric tons well, in 23, 24, they imported 25 million metric tons of US soybeans. You look at all the other countries, the next biggest one is the European Union as a whole at 5 million metric tons. Mexico does a great job. They're a great trade partner of ours. 5 million metric tons. You add all this stuff up and all the other countries combined, and you can't get anywhere near where China is as far as the global importer of soybeans. You cannot replace China in our US soybean export program. It's just not possible. So then, we talk about, well, okay, the other big soybean exporter in the world, Well, there's Brazil. Look what's happened with our market share. Go back to the early 2000 teens, we were lockstep with them. Before that, we were outpacing them. They've really taken on the role of the global soybean exporter. A lot of that's because they keep pushing production further and further. A lot of that is political, right? I mean, you have China really cozying up to Brazil and, kind of shying away from us as much as they can. So this is where we're losing market share, and this gap has just been growing, especially in the last few years. So then we talk about, okay, well, there's another portion of the soybean demand balance sheet, and that is crush, right? Crush, thankfully, has really kind of ramped up. A lot of this is sustainable aviation fuel, SAF. Soybean oil has found a newfound area of demand and has really taken on a bit of a leadership role when we talk about the crush and crush margins. And that's great, except for it takes a lot of time and a lot of infrastructure and a lot of spending from your ABCs, your major crushers, to go in and build these facilities. And if they don't have the incentive to do that, uh, then it's going to be a slow process. But really, what we need longer term, unless we all of a sudden change course with China, and now we have this warm and fuzzy relationship, and we start taking some of that market share back from Brazil. If that doesn't happen, we need to continue to proliferate the domestic crush. I've been saying for a long time, I think the best thing that we can do for the US soybean program would be to take Argentina to task, meaning we do the value add here. We stop really exporting raw soybeans and really focus on the value add and start focusing on exporting soybean meal and soybean oil and see this crush number really, jump to like 80% of our domestic or overall soybean usage. I'd love to see that. I think there are ways to get to that. I think that, when you have government intervention in a market, I'm not a big fan of government intervention in markets. I'm actually very much against it. However, we have government intervention in these markets in the form of trade issues, right? And so when you have a negative impact from government policy on a market, that's a situation or a time frame where I am for, or at least less against, having government intervention to offset the negative. And so in this case, I do wonder if it's sort of a national security thing where we offer crushers incentive to build their operations, tax incentive for building new infrastructure or making their current infrastructure more efficient so that we're crushing more soybeans. We're doing more of that value add in-house, so to speak, or domestically, to really, yeah, again, kind of cut our dependence on that export program that we have and really cut our dependence on our exports to China. So here's our NOPA crush number. And again, this has been the shining star of the soybean balance sheet. We know what's driving it. Really, it's SAF. I do say that you have to take this chart with a little bit of grain of salt, because when we're comparing the crush year over year, part of it is because we've added more crush facilities. That's crush capacity. That's a positive thing. That's something we want to see reflected in this chart. But also, more of these crush facilities have become NOPA members. This is the NOPA crush, not the USDA crush. So the percentage of the crushers out there is almost 100% now. It's like 98%. There's more participation in the NOPA crush numbers than there has been in the past. So that is part of this. But either way, crush is running really, really strong. That is the great news that we have for the soybean balance sheet. If we could get exports going, meaning if we could get China involved, that could make our soybean balance sheet really tight because of this strong crush number. But that export thing, I mean, the exports to China or not, I mean, obviously that is the 1,000-pound gorilla in the room. And again, at the moment, we're not feeling too confident about that. So let's talk about where the funds are positioned going into harvest. We talk about funds because they are a big portion of our market, and it represents the speculative portion of our market. And as much as we kind of like to say, the funds are manipulating the market and so on and so forth, well, they first of all, they provide liquidity to the institutionals and for our production side of it, farmers, things like that. They give us a marketplace, but also, they take trends and they run with it, right? So when they see a bullish story, they're not afraid to get long. I mean, look what happened in 2020. That obviously really helped prices. Um, we don't like it when they get short. That puts pressure on prices. So, I mean, funds, depending on what the overall situation, we either love them or hate them. But, in this case, they're very, very flat on soybeans. And I think that is a function of they just really don't know what to do. They don't know what to expect from a trade situation. I will say the longer it goes, I think the more likely they are to want to get a little bit short this market. But for the moment, they're waiting because they're not sure about what's happening with yields. There's a lot of uncertainty, and there's no clear direction of what the funds are doing or going to do with that soybean market here for now. Corn is a bit of a different story. They had been really very long back in February. Then they got really very short going into July, but they've really kind of been slowly covering that short position, which is a good thing. And in fact, that's really kind of one of the bigger reasons why we have those August lows intact for now. The question really is, though, if they continue to cover shorts and maybe get flat, that's about another 80,000 contracts for them to buy. That's still positive for the market. But is there any compelling reason for them to go out and get long right now? And I got to say, I'm not sure. I'm a little skeptical that they will get very long corn at this point, mainly because of the acreage numbers that we have. And even if you cut yield another 2-3 bushels an acre, which I think is realistic, it doesn't put us in a position, especially if you cut out some of that demand, to put us in a tight stocks to usage scenario, to really give a overall bullish fundamental for corn, unless, let's say, and this is a possibility in my mind. I don't think it's a likelihood, but it is a possibility in my mind that, let's say, we cut yields down to 178. If that happens and we continue with our very strong export program, if those numbers keep up, maybe in that case there's a compelling reason for them to start to build a long position. But that's a big if, right? I mean, we still have to wait and see kind of what happens with yields. We need more progress on harvest to get a better idea of that. At least for the moment, I think the best case scenario that we have here is that the funds get flat. And if they do, that'll keep some support underneath the market as we're getting into harvest, and sort of offset some of those producer sales that we will expect to see as harvest rolls along. Now, let's talk about our August lows. The reason we're talking about August lows is because currently we have our low that was put in on August 12th. That was the USDA's report. It was actually kind of a bearish report, but we turned around and reversed higher. That's a positive sign. We've had a very nice bounce off the lows, even though this bounce has really kind of stalled out here in the last week or so. What are the chances that the lows are in for the corn market? And to figure this out, I've gone back and looked at some years that we can kind of try to compare them with, and there's kind of a trend here. We look at the years that we put our lows in August: 24, 20, 16. These are all years that had sort of two things in common. One, there was a production issue of some sort. In 2020, that was the derecho year. 2024, the hot and dry finish. 2016, that wasn't a US problem, but the Brazilian crop really suffered. So the Brazilians didn't have corn to export. Our export business ended up being a lot better than originally expected. So you had a production issue somewhere in the world in those years that we put the low in August. And the other part of that was in 16 and 20 and 24, we had really big old crop stocks. And with those production issues, the new crop outlook kind of changed as we got into harvest. So uh, having those two factors, right? Production issues, but then also large old crop stocks. That's what served as a function to put those lows in August. And the large old crop stocks, the reason that's significant is because when we have large old crop stocks, we have to move old crop before we get into harvest in order to make that room uh, it, for the new crop coming in. So you get a lot of cash pressure actually happening right before harvest, and it kind of tails off actually when we get into harvest, right? The problem that I see here is that 2025 wasn't a year, at least given the current USDA's estimate for old crop stocks at 1.325 billion bushel carryover. As I said earlier, take that with an asterisk because that could change next week on their quarterly grain stocks. If that number were to jump, it could actually put us more into this mold. But we didn't have, or at least from the USDA's perspective, we didn't have big old crop stocks, not a ton of old crop selling pressure as we're getting into harvest. And so I think that means that the bulk of the cash pressure that we're going to see on these markets might actually still be happening as we get into September or later, end of September. We're here, right? But October, November, I'm worried that we're still going to see a lot more cash pressure yet on this market. Now, that will be a function of how big is this crop. If we're coming in well below expectations on yields, maybe that isn't the case. But if we're saying, yeah, it's not as good as we thought in August, but it's still a really big crop, and I've still got more bushels that I have to sell. We didn't get those big summer rallies for resting orders or target orders to get hit. I think guys are rather undersold. I think there's a lot of bushels that will have to get sold during harvest. So again, if that corn crop is there, I'm worried that we're going to get some pretty significant harvest pressure yet to come. And I'm a little skeptical that our low is in for corn. That August low is going to stand for corn. Now, all that being said, let's talk about strategies. I know I didn't paint a very, very bullish picture here for either corn or soybeans at the moment. Now, again, a lot can change with that. If corn yields do end up in the mid to upper 170s, that changes the scenario pretty significantly. If we get a trade deal with China and they start buying anywhere near what they normally would, that changes things significantly. So there is upside potential if certain things happen. But given what we know right now, and given the lack of Chinese buying in soybeans, I think we really need to be looking at downside protection. And there's a few ways of doing that, right? For one, we had. I say had because soybeans gave a lot of that back here in the last couple of days, but we've had a really nice bounce off those August lows. Corn's still hanging up here, kind of near the recent highs. I do wonder if making some sales here and now before we really, really get into harvest is maybe not a bad idea. The other option there is to, set a floor, buying put options, the whole Mark Gold thing, buy puts, just to protect that downside protection in case those August lows are not the harvest lows. The other way of doing that is what we call a synthetic put. A synthetic put is where you sell cash and then you turn around and you buy a call. That puts a floor in the market, but it also gives you some upside potential if the market rallies. That call is going to help you participate in a rally if we get one. By the way, that's also called a reownership strategy. Now, a synthetic put technically is when you do both of them at the same time. Reownership strategies are a little bit more ambiguous. And what I mean by that is, if we really think that corn's going to go back down and make a new low, which I lean towards that at the moment, in that case, I would be saying, hey, let's make some cash sales here, look for a 20 or 30 cent break in the corn market, and then we buy the calls and put those reownership strategies in for that typical rally that we get post harvest into the end of the calendar year. And that way, we kind of set it up so that, I know these aren't wonderful sales prices right now, but if we can use one of these reownership strategies to capture some of a bounce on what would be a typical seasonal bounce, and put 20 cents back on top of our sales that we're making right now, all of a sudden it doesn't feel so bad. So that's a more complex strategy. Obviously, it depends a lot on timing. Um, there's a lot going on with that one. But these are all things that we're doing right now. If you'd like to talk more about it, let me know. I'm more than happy to talk strategy. I mean, that's what I do for a living, and I love doing it. So, yeah, I'm available for you guys if you want more insight into strategy and what we're doing right now. So that being said, I also have a Ag Hedge hotline. This is me leaving a message. It's a recording that I do around. I try to get it done before 2:30 p.m. Central Time every day. And it's 5 to 7 minutes of me recapping the grains markets for the day. You can call in at your leisure anytime in the afternoons to listen to what I have to say. I try to do it every day. Some days I get, I'm traveling or giving presentations or things like that. But that is available for you guys if you want to do it. That's where you click on or that QR code. Yay for technology, right? So that brings us to our profit planning series. We've talked about that at the beginning. We'll talk about it at the end. It's a weekly commentary that I write. My Ted's 3 keys, the 3 things that I'm looking at for the week. I've got some really cool charts in there that I'm sourcing from our new chief market analyst, Karen Braun. She does a great job. If you're not familiar with her work, best charts in the industry. So I get to use these things and then share them with you guys and kind of give context to them. So yeah, sign up for it. I mean, this profit planning series newsletter I think is really fantastic. Yeah, I'm a bit biased, obviously, but I highly recommend you guys do that. So thanks everybody for your time. I've really appreciate it and enjoy doing these things.
Oh, yeah. Well, thank you. Oh,
I was
go
just
ahead,
going to kick
Ted.
it back to you, Jenna. Jenna Malpe, everybody. She's gonna lead us out.
Yeah, no worries, Ted. And thank you for joining us today and giving us your take on the markets. We know that there's a lot going on, and we appreciate you sharing your insights with us. And as Ted said, make sure to sign up for our profit planning newsletter that comes out every Tuesday. We are going to actually link that in our comments, so you guys can click on that, as we know a lot of you are probably on your phone and can't click on that QR code. But thank you for joining us today, and find us again next month for another